Hi, I'm Victoria Hartley and I'm the Group Editor of Mortgage Solutions. With more and more people looking to either improve their homes or release the equity, it's no surprise that this is an area that's growing in popularity. Many customers look to remortgage to fund an ambition, improve their homes, or simply because they need to raise cash. But it's not always easy to understand how you can do this and what options are available, especially with the tighter criteria that some lenders have, for example, around those who are self-employed or work on a contract basis. Joining me to talk more about this topic is Jane Atkins, a field sales manager from specialist mortgage lender Kensington. Hi Jane, nice to meet you.
And you, Victoria.
So with the rise in property prices over the last few years, first-time buyers have found it increasingly difficult to get a foot on the property ladder and have been turning to their parents for support. For millennials, the bank of mum and dad has become one of the few ways for them to raise a deposit. As a specialist mortgage lender, how does Kensington help first-time buyers?
That's a really good point, Victoria. So Bank of Mum and Dad is now rumoured to rival the 9th largest lender in the UK. And I think many parents aspire to assist their children by getting them either on the property ladder or where their children need somewhere bigger because their families are expanding and more grandchildren are on the way. So many families don't have the cash reserves or actually want to use their cash savings to support their children. But one way we can assist is by the customers unlocking the equity that they've built up in their property by a 90% remortgage. So another growth area is where the customer doesn't actually want to move home, but they might want to expand their property, or they might actually want to modernise their property and carry out some home improvements. And again, with that, Kensington can lend up to 90% of the property value to assist them in improving their home.
For what other reasons do people look to raise capital from their homes, and how does Kensington help them do it, particularly if their circumstances are quite unusual?
So as a head and a heart lender, Kensington really scratch beneath the surface to help those customers who might find their circumstances a little bit more difficult or a little bit more complex. And what they need for that is a human being actually making that lending decision rather than a hard automated credit scoring system. So a popular area is where customers are looking to refinance or to remortgage to consolidate some of their debt. The mortgage charity suggests that the market or the debt market is actually 1.6 trillion, which is actually increased from 1.55 trillion only 12 months ago. So a cost-saving consolidation exercise up to 90% can really help those customers with one manageable payment.
So in what circumstances would Kensington not support a mortgage application?
So Kensington will consider lending for most legal purposes. The things we do get uncomfortable with is something that's more speculative, such as injecting cash into an ongoing business or raising capital to repay an inland revenue tax bill.
Let's go back to the self-employed contractors and business owners. Now, many of these people can struggle to remortgage because of how they've chosen to work. So what can Kensington do for those people?
I think you're right. I think some self-employed customers or newly self-employed or customers joining the contractor market do sometimes find that they may not be able to get a mortgage, but that actually isn't correct. So at Kensington, we will consider customer up to 85% loan to value if they've only been trading for 12 months, as long as they've got supportive accounts or the self-assessment SA 302 documents. Customers who have been trading a longer period of time, we're quite happy to consider up to 90% for a remortgage and 95% on a purchase with a 2-year trading history, again with the accounting information to back up their trading history. One of the things that we can do as well, being a lender who looks at more complex situations, is rather than using an average of accounts, we're happy to consider using the latest year's figures, as long as that income's sustainable going forward. And again, that can really make a big difference to how much that customer can actually borrow. With regards to customers who are trading as a limited company, rather than just taking a salary and a dividend payment, we're actually quite willing to actually look at the accounts and actually look at taking a proportion or their share of the net profit and also then adding back into their salary. So with regards to contractors, we've certainly seen more of those come to market. There's been definitely a shift with regards to the employment market. So contractors who tend to be on a day rate, and there tend to be a certain number of professions out there, from engineers through to IT contractors. With Kensington's point of view, we're willing to accept any different type of contractor as long as they can show us a contract that has a day rate. And at Kensington, when we're looking at their income, we take their day rate and we take it by a 46-week year. So if you've got somebody who's earning £400 a day, working a 5-day a week, that customer can actually obtain an income of £92,000. We also see many customers in the employed market who have a large amount of variable income, such as overtime, contractual shift patterns, people who earn lots of bonuses and also commission. So again, with a sustainable track record, Kensington can consider up to 100% of that variable amount of income. We can also look at second streams of income. So customers who've got second jobs, or they might have maintenance payments, or they might have got child benefits, or even getting income from land and property and investment income. And again, we can utilise that to really help with the affordability.
We spoke earlier about the buy-to-let market, but how about let to buy? What happens if a customer wants to keep their existing property to rent out and go on to purchase another one?
So where the customer doesn't want to sell their existing property, we will allow them to move that onto a buy-to-let standing, and we can capital raise to raise the deposit for their onward transaction. So we will allow an 85% remortgage in that circumstances, subject to the rental being achievable, and then allow them to use that cash deposit to put down on their new transaction. And again, at Kensington, we will allow that customer to come back to us for their new purchase, and we can raise up to 95%.
So many people are struggling with debt issues nowadays. If people come to you with missed payments or defaults of any kind on unsecured credit or secured, how can you help them with that?
So some customers do believe that if they've had an historical background of CCJs or defaults, or they've missed some unsecured or some secured payments, they actually can't get a mortgage. That is not true. So at Kensington, we can assist customers who've had a CCJ or a default as little over 6 months ago. And very similarly with people who've actually had some missing mortgage payments or some unsecured arrears, we can help those customers. We can also allow those customers who actually want to repay some of their credit issues that they might have experienced in the past, maybe due to a life event, a divorce or a redundancy, and they actually may want to repay some of that debt. At Kensington, we will allow them to capital raise to repay CCJs and also even debt management plans.
What happens if a couple get divorced and one wants to buy the other out? How could Kensington help them do that? What kind of factors do you need to take into account?
That's interesting, because 42% of marriages actually end in divorce, and half of those within the first 10 years. So we see customers who want to raise their capital, and they actually want to use that capital to buy out their ex-partner or soon-to-be ex-partner. So at Kensington, we will allow that customer to remain in their property and to remortgage their sole name, and they're allowed to raise up to 90% of the capital value of their property.
So with the market and people's circumstances changing so much, how do you help brokers keep on top of Kensington's lending criteria?
So as a head and a heart lender, we do seek our brokers' feedback, and we look to offer a wide range of products. We've recently launched into our Brighter Futures range, which assists our older borrowers who are lending into retirement, and those young professionals who have recently qualified, such as a doctor, a dentist, an accountant, etc., who actually want to get onto the ladder, and they actually want to really maximise their income to their loan that they can actually borrow. So we have a team of 12 account development managers who are based regionally, and we visit our customers in their offices. We also support them by attending any industry and network events to reach a wider range of our broker customers. We also have a business development unit which takes all of the inquiries and helps our brokers with their decision in principles, which is based in our head office down in Maidenhead. We also have an intermediary website which our broker customers are able to go onto and obtain a quick look up on our criteria function and find out about all our products and also our service standards.
Jane, thanks so much for all your help today. It's been lovely meeting you.
Thank you very much, Victoria. And thank you for watching. For further information, please click on the following link.